Good evening, traders. This is Matt with Newbie-Trader.com, and I just wanted to go over some real basics in the market because I know there's some of you out there that got caught today in the reversal that happened mid-morning, and I just want to kind of step back and take it back to basic patterns, basic trend lines, and help those of you that are not using our tools and systems to, just take a bigger picture look at the market and try not to panic. And if you keep things in perspective, it'll tell you when or when not you should be getting involved. And let's just step back to yesterday. Yesterday was the little bounce day after the strong down day we had on Tuesday. So if you recall, on Tuesdays the markets came off pretty hard after putting in a high late on Monday, and Wednesday we just kind of traded sideways and we created this bear flag channel. Now I'm not going to go over exactly what the bear flag is, but basically it's just a series of higher highs, higher lows as the market's making a bounce off of a previous momentous downswing. And so yesterday we kind of were watching this channel, and there wasn't a whole lot of great trading opportunities, but late in the day the market ended up making a push to the downside and actually broke the lower edge of this trend line of the upward sloping channel. And that was a first sign that we might be in for a pretty swift move either in the overnight or today. And so we just take and draw a simple symmetry tool measurement. We took a measurement from the high to low, transpose it over onto the high. And so when it broke this level here, when the ES I'm talking about broke 21.2450 in the overnight session, that gave us a heads up target that we were probably going to go down to 21.16 area. That's this target down here. And you can see as the market broke that, and I have plenty of training videos on my blog. Go ahead, and if you're interested, this is symmetry and it's relating Fibonacci to Elliott waves. And when we broke that 100 extension, we were looking for a 161 target, and they made it in the overnight, and we started basically chopping into the open. So when we were going through our morning brief today in our live trading room, I just simply drew this downward sloping channel because we had made this little swing high. And when we opened up, I just, it was real basic. We just said, hey, our focus is going to be on the downside until which point we break this trend line, and then we'll see if we have any opportunities and where the momentum is in the market, etc. Now, you'll notice there's some red bands and some green bands and some tan colored lines on my chart. Well, those actually show up on my charts and my members' charts prior to the market open each day. And that's some analysis and some work we do where we look at Gann levels, we look at Fibonacci levels, we look at confluence, we look at market profile, we look at a whole bunch of things. And these end up being our key levels that we're looking at for a reaction of the day. Now we have 3 levels we put below the market and 3 levels above the market. And you can see these levels. Basically the tan line is what we would say is the pivot for the day. And the light colored greens we would say are minor buy zones. And then the bright green would be major buy zones. And same thing above the market. We have the lighter red is minor sell and the darker red is major sell. So going into today, before we even opened, we were looking at this 108, 109 area down here as major support. And the market came down and actually bounced off that level. Now, one thing that's pretty interesting, now we're not necessarily saying buy that level. Now we do have some shorter time frame tools where we can take advantage of scalp trades and things like that, but that's not the purpose of what I want to talk about tonight. I just want to mention that we have that level, we reacted to that level, and the market came all the way back up, actually broke the trend line, and hit the backside of this overnight target, which was around 2116. Excuse me. Once we reacted to that 2116 level, they came down, tested the trend line break, and then we started getting green candles again. And just to mention these candles, these are an NT Rinko candle. You can get them free on our website. There's other people that sell this indicator for over $200 online. Hopefully you've not spent that, but if you use NinjaTrader, you can go to my site. You can download it for free. It's just go on the main homepage and you'll see a little place over there where you can click and get the download. But anyway, this is with this candle, it just makes looking at the market a lot easier. It removes time from the equation. It just helps you focus on price action. But what was interesting about this move, once we started out of this trend line, we started climbing higher, there was another opportunity for us to make a similar symmetry move that we did yesterday. So the move that I was interested in, and let me just draw in this Fibonacci for you. If we go from the swing low, whoops, picked the wrong drawing tool there. There we go. If we go from this swing low and just measure the first wave, wave 1 as it relates to Elliott wave, and pull it down to the bottom, which is wave 2, once we break this 100% level, I'm looking at it just being a kind of an A, B, C wave turning into a 3, 4, 5 wave pattern in a very basic Elliott wave principle. So once I break 100, which at this case was 21.19, we would have a small trade up to say 21.24. Okay, that's a 5-point trade, but there was some big caution flags going off in the room, and one was we saw this neckline around 21.20, and we did not think that the market was going to necessarily go straight up, although we had some upside targets. What we kind of anticipated happening was the market would come up, and this might turn into a inverted head and shoulder pattern. So we were prepared for a little bit of a pullback, hoping that it would come down to around 21.14, and then we'd get some very nice entries there with confirmation and the market push higher. But as you know, the market isn't always like a textbook. It would only pull back to about 21.16 and a quarter, 21.1650. So we still left about a point and a half on the road or on the way there. But the beauty of it was the area that it bounced off of was again the same target that we had in the overnight. So that was aggressive buyers front running what would normally be this pattern that you would think would create an inverted head and shoulder. So now once we closed higher again and actually broke that neckline, that gave us a lot of confidence to hold up to some of our key level targets, which was 21.32. Now, mind you, this 21.32 symmetry target and this extension target at 21.32 just happened to line up with the level that I had given our customers earlier in the day. Now, we did not develop that 21.32 level before the market opened based off all this symmetry down here. That is just coincidence, but the market hits these levels time and time again, although it was derived by a completely different process. So anyway, the market came up backside of this old 100 again from yesterday night or from the overnight session, rotated back down, tested the neckline. That gave confirmation, and then a good move up to 21.32. Now you might be saying, well, that's all fine and dandy, and hindsight looks great. Well, again, I just want to reiterate, I'm just going over some basic symmetry stuff with you. Trend line breaks, channel breaks, stuff that any of you can do. And again, you can get this candle on my website. So everything that I've done up to this point, you can do on your own, except for these daily levels. Now, these levels aren't hindsight. They're there in advance of each day. And you can see they reacted, and they react most days. But I want to step over and show you our ultimate fractal tool. And if we go over to our ultimate fractal tool, this is again looking at the S&P 500 coming off yesterday. And again, here's that same wedge formation I was watching on the other chart from yesterday. And you can see here's the overnight session. Now, these pink arrows and these trailing stops and these pink circles, the arrows are an auto signal tool that is programmed. So we're not putting these levels in. And we had, after the break yesterday of that wedge in the overnight session, you can see the retest of that wedge, and then there was a signal as it came through that low. And that was around, now I doubt any of you were trading at 10 p.m. last night or 8 o'clock last night when that happened. I know I wasn't, but just looking back at that particular, that was around 21.26, and that trade ended up getting stopped out around 21.19. Here, fast forward till this morning. Okay, this morning was a continuation of the move. They broke that overnight Globex low right after the open, went down, and again, I don't have the bands on here. I guess I could put them on here for you if that would help. Let me just go to my indicators real quick and put on my pivots. Sorry about this. Actually, I'm not going to do that just because it's going to refresh the charts and it'll be a hassle. But anyway, if you recall, we had that big bright red band here right at the low, and then it went up, and there was a lighter red, and then we had a pivot. But after they came out of that, then you can see we started getting these green fractal levels indicating there is a potential trend change. And this swing point right here at 2116, that was that neckline we were referring to earlier where we thought we might get this head and shoulder pattern as it came back in the retest. You had your first signal right there about 2116. Now that one, first target off, stopped out on the second contract. But then when they broke that swing high after that neckline retest break and that symmetry level, you can see that one went on, call it 2120, and it got stopped out at the end of the day around 27. You can see the market's moving right now. So anyway, there is structure to this market. It's not random. If you didn't see that pivot bottom, if you didn't have a plan for what may happen, feel free to stop by over at Newbie-Trader.com. We'll be glad to let you see some of our free tools, let you take a trial, and I'll even put a link underneath this video. If you'd like to trial those daily levels, you can do that. Those levels, again, show up on your charts each day. We provide them for the ES and the YM each day. And if you would just like to take a look at kind of how the YM worked today in relationship to those levels, again, very similar, but where the ES kind of made that head and shoulder bottom, on the YM it actually made a double bottom. So we had some little different targets, but you can see our reversal levels for the day and everything still held up. So anyway, just want you to step back, look at the markets from a basic perspective, and don't be afraid to just use very simple trend lines and channels because the market moves in waves. It's predictable. We can teach you about the symmetry associated with those waves. Go check out some of our other education section in our blog. Go to our blog and search for Saturday School. Little longer trainings, but we'll give you a lot of detail on how to use these symmetries, and you can access that information for free. So anyway, have a great evening, and if you'd like to check out these levels, we'll have a link included in this email. Thanks, and make it a great night.